Hello and welcome. It is Friday, the 8th day of March 2019. My name is Derek. Welcome to the Money Charts channel. Let's take a look at silver and gold charts. And we'll start off within silver and that of the monthly. For if I scroll back a few periods, as I got some lines above here, we're obviously looking at the highs. That's two-time hit highs at around $50. The first time I'm unable to show on the TradingView platform, as they don't have prices going back to 1980. As if you're unaware, the price rose in 1979 several folds higher, about $6, ending the year in 1979 at about 20. And then over the first few weeks of 1980 rather, the price went up to about 50 and then had some correctionary moves there after that. And then it's having a correctionary move here, nothing like it was back in 1980, 81, 82, 83, as it fell all the way down to $4. And its first move here went from 50 down to 26, whereas its first move went from 50 to, I'm just trying to think this in my head, I think it was like 14 or 12. I'm not going to check, and I could. It just takes me too much time to check those numbers. I've seen it way back in the past. But the whole point is that's where it was. So if we're looking for asset classes that haven't properly inflated in price, well, this could potentially be the the Grand Classman or the top of the list, possibly. But since the decline came into play on the monthly chart, price action not quite getting up to this Fibonacci level at 22.39, but it did establish a level of resistance, and it did come back to the band and then started to roll over, staying above this previous low, 14. And this level of this line in here, I'm going to go back to show just a few of the charts or a few of the candles. And within it, it's got the Fibonacci hit from this low to this high, 38.2%. The area of previous support. Now it's at a huge support area right now after it has fallen from it, as it was at about, well, in that 1613 area. Now at 1528, did find the low at the 18 average of such. We'll see how close it was on the exact number. The low coming in at 1498, the 18 average of lows. It's in at 1503, so a few cent pierce extra below. We can see here that this declining move, it's pretty much starting to flatten, and obviously staying in the band would do that. It needs a decent size gain, I think, up to close to the 18 average of highs to get this line to flatten, but the 18 average of lows should be starting to flatten out if the prices can hold and stay above. Getting above this, I'm looking short term to a quick move up to the close to 18, probably piercing above 18 level. But in this case, the high in here was in at 1618 or 1621, so it pierced it extra by about 7 cents and change. As far as looking at this on a weekly term time frame, we can see here hitting this area multiple times, or rather twice. And then down she falls pretty fast. Did it come back to where it came from? Close. For this high, came in at 1491. But it is at that spot. I'd be looking for the 18. Getting above this, it's in the previous high area, 1571. You're looking at, especially if you can see good higher lows from here, building up some sort of ascending triangle over the next, for the rest of March, rather. Then, yeah, the situation of breaking above the 18 highs, but below this gives good probability odds, I would look, for that breakout with the price objective at around $17.90. On the daily term time frame, we're having a good day so far, as the price is up 2% right now. Still, it's got some moves or some areas to go towards this 18 average of lows. And even the 18 average of highs would be the next level, which would coincide with this previous level of support. But it's the correctionary move from this down move here. And whenever you have your breakout like this, okay, where did you come from most recently? We can see this side, this side, this side. We'll have to shorten it out. We'll do so. But you want to hold some of this area where it came from, and I'm looking mainly towards this resistance and congestion area of around probably 1509. Let's take a look at this on the 4-hour term, and we can see it right here, this level of major resistance, 1515. If there's going to be, and you know what, I have to say it's better, more likely from where we stand that it's probably not a bad idea short term to go long here. And I say that because as I look at this, I think it's more likely that we have a move up towards like 1556 area, at least to this next key level. To me, I'm quickly looking at this, but then it is to even come back down to say 1511, which is the area, of course, where I'd be looking to have a buy order. And that's only like a 16-cent reduction in price. So I think mathematically, it's at this point a decent date. I mean, I've not got no way of doing it, and I probably wouldn't be too enthusiastic to do it if I had the opportunity to do it. But yeah, I think it's a decent play as I look at it. Now, as far as some key levels, where would it go? Well, Fibonacci from here. Yeah, you know what? Yeah, this, I would have to think conservatively, 1556. Moving this now onto the single hour time frame. Let's scroll some periods back. And we're seeing it from this decline, having this move, then going sideways a bit. Huge down move here, correctionary move, and it successfully corrected on a bear level, resisting the 18 highs, coming down to the lows, and then breaking below, resisting this 18 now, microscopically making a lower low. Well, not microscopically, it was from here to here. Definitely not a big one. Definitely at least, at best, a minimum for a decent leg lower. But with that being said, this first level of resistance was established in here, or the potential level, at 1520. That was not where resistance was. It got reestablished at 1516. Multiple hit at that point. But then after it last left it on this 8-hour time frame, it grinded its way lower down to this level here. And then when it got above, well, what did we see? We see, well, it resisted this area where short term was supposed to go to. Came back to the 18. Now we see this thing having a great breakout above it. To me, it's at the early stages of what the short-term break would be, as I was explaining on the 4-hour, how I think it's a decent-sized day trade. And I'll find out, well, we'll look in the next few days, because there's not going to be no trading after today till Monday, just to see if it was a short-term right play. And I guess if you're playing the market, you'd find like a 2, 3, 4x, try to find some margin of some sort, maybe. Unless they're really tight and you want to play for small percentage moves, then this would be ideal. But yeah, I like how it's played out. Now, for myself, I ended up buying about probably right around here at about 1506 on about 9 a.m. March the 5th, 9 to 10 a.m. I ended up increasing my physical silver portfolio for a little over 2% on my 999, which is okay. But I looked at it as in, well, I got fiat currency, sort of, that I've been using in cryptos as a hedge against Bitcoin prices going lower. And the keyword is hedge, hedge, hedge. And you got it in exchanges. And I'm thinking, well, I've been wanting to take funds off exchanges. I technically could end up getting some silver and gold, and well, it'd be in my possession in within the next couple of hours or so. It's probably going to physically, literally be in my possession, as the UPS truck will be coming today. But right now, this market's breaking out. Is gold breaking out? Oh, hell yeah, of course it is, because silver and gold, they pretty much do the same direction. And we'll put her up on this chart now. The last time I bought gold would have been about right in here, around 9 a.m. to 10 a.m. on this point here. It was 1286. Now, I spent 475 Canadian fiat dollars, and I got grams and grams and grams, or 0.25, which will now be the biggest gold piece that I have. It will be a 999 9. I don't know how many nines it is, but it's a maple. I know the silver is quad 9. As far as this chart is concerned, breaking above this level of resistance, it's now congesting within this area, but as more importantly, I really like how this price action has came back down in here, and this big green candle up on a few hours ago. A little bit of a price correction, but we can see it's immediately starting to bring this red bit down, because what happens in markets is you get to these levels that haven't been seen since here. So there's people waiting and waiting. Oh, I'm not going to sell until it's like around 1300. Oh, now that time has come. So now they sell. You get the new wave of sellers that see these prices at this for the first time. And in this case, it's only day traders and short-term traders, but they see it for the first time in a long time, and now they make that move. And now we have obviously there's always going to be supply in the market, so I'm not saying supply would go up or down, but the demand for the supply a lot of times goes down, because once that first wave, you got people that are like, man, this thing is going good. Not only don't want to sell, but I maybe want to buy. And that's exactly why we can get some of these amazing types of moves that can happen so fast. We got the waterfall move lower after just grinding. But as far as reversal of trend, this thing is just iconic. Okay, you have this uptrend in here, right? Higher highs, higher lows. Here's your correctionary phase at about the 7th, but right in here on February 20th, 21st. Oh, it falls below, and it just happens to hit this magical line that I put in a long time ago. But throwing that part aside, what it did was stage number 2, establish a level of support. Or stage number 1. Yeah, stage number 2. Stage 1 was in here where the band flattened out, because it came down to the red move, 2 periods going sideways, pause moves. You're moving on stage 1. As you've seen the price going down in this one in here, it wasn't a clear break below. Definitely it confirmed stage 1 band flatten. And then with this one, okay, now we're attempting to revert the trend, attempting to get stage 2 in play. Now stage 2 doesn't always come into play. It could just skyrocket down. Now in this case it did. More times than not, I think it does the 4 stages that I talk about. But you still have to be aware when you're looking for it, that this could just go straight down, as is now with the polar opposite, which we'll be getting into straight up. Okay, so we come in. Okay, there's now coming back to the bands, correctionary phase number 3. So you need that decent but not so large of a decline. You need it to correct either through price and or time, which it does. And now you need to have it a clear break below. So here's where it didn't have the clear break below. Down in here. Now if you did happen to go short here, you should not have gotten stopped out when the price action just barely got above the 18 average of highs and stayed below, which really should have been in the area of about 1331 to about 1334 and a half or a third, as the area where I would consider as where you have to put like above what key line, meaning if it's going to make a lower high, don't stop out where it's going to make that lower high. That should be the obvious point, and this is where it did. But here is where it basically had the big move. It was already a small pierce in this, so you have this. Okay, yep, now it's a confirmed bear market. It already completed stage 4 and a big down move, doing the prototype. This is why it's iconic or epic. And now for the reversal trend on the other side. The stage 1 band flatten out, which is so obvious here. Stage 2, established resistance, it's doing it now. As it stands, the established resistance is in that of 1300 and a little bit more 80 cents. Could be higher. Tops and bottoms are known after the fact, and it's many facts after since we knew this top. And after the fact is, yeah, this is a low. Whatever this high happens to be is going to be that of a key high. And then what I want to see is this to come back to the 18. Right now it's rising, so for today's session we're looking at about 1291-ish or so area. And here, if it comes back through price, then we would know, okay, this high has been established. That's what it needs to get above. That's what the number happens to be. We're now in the midst of stage 3, which is the correctionary move on the attempted breakout. And if it can correct it correctly, which does to do so, it has to get above where it came from. And clearly, Yeah, okay, we're looking to go for a good move. And when you're looking at it this way, you're looking at its first leg higher in what would be a newly bull market. This is one leg lower so far. But if we get the situation in here where you have this breakout attempt, again, it doesn't matter where resistance is established, you have your stage three, you want to come back and hold this where it came from in here, 1288, 1289. If you see weakness on the 18 lows and it's not doing so, then you're looking at the lower high rally, you're looking at a bear market rally, and you're going to be looking for a significant leg below. Daily term time frame. We have this rally today. It's in that of about 1%. It's doing so in a newly declining 18 average. Oh, stage number 3 for reversal of trend. Stage number 1, of course, in here where it was just doing a whole bunch of nothing, the 18 average flattened. Then you had this about 3 candle break lower, maybe even 4, however, that's irrelevant. Bottom line is it was significantly below this support. It happened to match where you thought it would, a little bit below. I would have said the area of this resistance to the support, so I would have said at least to about 12, what this number here, and it did a bit more. Okay, stage number 2. Stage 3, we can see it's already hit this band. So now it's a big battle of bears versus bulls. Next level going higher, I'm looking at the 18 average of highs, and well, that's just going to be enough to flatten it out. Breaking above that, we're looking at the failed breakdown. So at this stage, because of this rally, it's either going to be resistance in here or it could be that of the failed breakdown. And again, for now, I mean, it's got a decent ways to go. It's just gotten to its first level, the lows. It's got to get to the highs to even attempt to flatten this out, the newly decline. But it's also had a good enough gain where if we end up having resistance to the point where it doesn't do well in the short-term level, it has to hold, breaks down below, we're looking at stage number 4, and that is newly bear market, and I'd be looking for at least a minimum of a price objective to 1239. This is where it gets really interesting on the long-term time frame. Weekly term, we can see that's had this nice run. It's a newly bull market, so it's having its first good correctionary phase within it. It did resist in the area you would expect to as it was going higher within this congestionary range. It's now, this is the 18 lows. And even a small pierce below extra when you have such a good move is so normal and so fine for a bullish level. Although, just because it pierces below doesn't mean, oh, it's fine, it's going to work out. No, but it doesn't mean you get so, aggressively short because it does it either. But we look at this resistance level at 1321 on the monthly term time frame. It's got larger size lines than these ones do, which represents Fibonacci from this low to this high, where these lines represent Fibonacci from this low to this high. So these are passé right now. I'm not going to delete them because you never know how they could come for support. But within the resistance in here, it's been tested quite often. 18 average is just chopping around going sideways. And for reversal of trend in here, it's continuously in stage number 3. Come back to support. Established resistance here back in 2016. Technically, it held the 18 of lows here. It has stayed above this established low. But doing so, it has not even attempted to break above this high, so it's still in that correctionary mode. Chopping up and down below the 18, and it's now had this chop below, now it's chopping above. So until it can have this clear break above this resistance, and when it does, oh my goodness, this thing is going to be so exciting. When it does manage to do that. I've been looking at this setup for what seems to be years, and it kind of is, because it first got up to this, like back in here, when you were looking at price action. Oh my goodness. Yeah, we should pull back a bit, but if it goes higher, I mean, this thing is poised, ready to go, and you could have been saying this in the summer of 2016. Almost 3 years later, we play today. Obviously, I know that it could easily be a bear market move, breaking down below the support of 1060. We're going into the 800s or something. Okay, yada, yada, yada. Are we going to do it? No, of course not. But again, like I'm stating, it hasn't even gotten above this. It has to at some point, and the more longer these setups play out, we expect it over the next 2, 3, 4 periods, it should do this. And 34 periods later, it hasn't done it yet. Oh, it's going to be interesting to say the least. Thank you for tuning in and have yourself a great day and weekend. Bye bye.